Joining me now from Singapore is the senior currency analyst at BNP Paribas, Thio Chin Loo. Good morning. Thank you very much for joining us today.
You're welcome.
There seems to be a general lack of enthusiasm for the measures announced yesterday by the Bank of Japan. Do you share those pessimistic sentiments?
Well, I think it echoes the dilemma facing the MOF, the BOJ in Japan, that clearly falling short of multilateral intervention, which is unlikely. Even unilateral action is unlikely to work in terms of stemming yen strength. So the BOJ MOF is aware of that, and therefore the reluctance to intervene solely in the FX market. So that clearly leaves the yen still subject to risk aversion trends that are still prevalent in the marketplace. And as long as those risk aversion trends stand large, it's very hard to expect the current yen strength to unwind.
So they're reluctant to intervene solely. I mean, do you foresee a time whereby we could have coordinated intervention with other G7 members?
Well, at this point in time, we see what it means for other central banks in the world. You know, the Fed is quite happy to allow the US dollar to weaken. It's been a little bit too strong against the euro. They would rather further weakening of the dollar against the Chinese yuan, as we know. And clearly, the dollar's weakness is not a key concern for the policymakers. As far as the eurozone is concerned as well, a cheaper euro would certainly stand to help the eurozone in terms of pulling itself out of this current economic slowdown. So clearly there isn't a lot of reasons for central banks around the world to want to intervene, to act to break the yen's strength or the dollar's decline. So unless we get to see a change in mindset, it is very difficult to see where that reasons for multilateral intervention will come from.
Do you think we could see, a record high for the yen against the dollar in the next few months?
Well, I think the yen strength trade has been already played out in the market. I think a lot of it will depend on how the economy goes forward in terms of where the larger economies, particularly the US, Eurozone, and Japan stand. As it stands now, we do believe that there will be a softer patch for global economies into Q3, but we're likely to avert a sort of double dip scenario in global economies. So that will prevent a big risk aversion trade going on in the markets. But we do expect that some volatility may return to the markets if stock markets take a turn for the worse, capital flight occurs, and that could as well give the yen some strength going into the third quarter.
Thio Chin Loo, thanks very much for joining us today, speaking to us live there from Singapore, BNP Paribas in Singapore.